Interest rates. Obviously, you want to be pretty conservative. The easy way to do it is that you can literally go to CNN. I use the CNN 5-year Treasury. I just have that up at all times. So I'm going to share my screen to that. So you can literally, and by the way, I'm not saying I'm a fan of CNN, but just to give you an idea, this is where you can easily find exactly what the Treasury interest rates are typically trading at. So to be conservative, you can see here. So I have my 5-year Treasury up. Let's just say, because typically with commercial loans, you're going to get a 5-year balloon, right? Or a 5-year loan, maybe a 3-year loan, but let's just say 5 years for this example. Roughly, I'd say somewhere between 2 and 3% is what your interest rate is going to be above the Treasury rate here. So right now, I mean, it's kind of insanity that the Treasury is trading at 4.227. That's ridiculous. I'm not too happy about it. Hey, I mean, it's just absolutely climbing because they don't believe the economy is doing a fantastic job. But anyways, that's at the time of this recording. We're going to now flip back over. So 4.227, we're going to do roughly, again, to be conservative, you can even say 3% above. But in this case, let's just say we'll do 2.5% above, okay? So we're going to do 2.5% above, 4.227. So that would be roughly 6.75. So, and then in this instance, the big thing to keep in mind is that you have to have a debt coverage ratio, right? I'm not doing a construction loan. The type of mortgage, you can either do amortization or interest only. Now, typically, we will always do amortizing. However, sometimes with the bank, you might get lucky and you can get interest only for 1 year, 2 years, 3 years, or something like that. Probably not on this asset. We're gonna do amortizing loan. And now you're gonna be able to get an idea like, okay, well, 70% loan to purchase, that's what LTP means, right? LTP, loan to purchase, or loan to value. With a 70% LTP in this case, I'm gonna be putting 540 grand down. And based on all the income, which I'm gonna show you, I already plugged that in for you. That's already on the income details here. You can see all the income. So I have my 6 units. They're all 650 square feet. They're all generating different amounts of income. It will automatically total it quarterly. I'm saying that I can increase my rents every year by 3% because it's rent controlled. This is in Manhattan. This is basically market rent, so I'm not really going to be able to increase the rents much at all. And it is rent controlled, so I'm not going to be able to do anything drastic anyways, okay? Obviously, you can see like maybe of this one tenant, you can maybe put like 1950 here, but it's kind of negligible. I also plugged in all of my expenses already. Let's scroll down a little bit here. So I got my taxes, my insurance, water, electric, gas. It doesn't really have any yard, but snow removal, landscape, there's nothing there, obviously, because we're in Manhattan. You want to make sure you're very conservative across the board. These are just numbers that I went a little bit higher than what the seller told me. Marketing costs, you're always going to have marketing costs. When it comes to a small multifamily, you're typically only going to have very minimal marketing costs, but you can also think about marketing costs as commissions that you might have to pay out every single year. Trash removal, exactly what the seller told me, plus $600. Repairs and maintenance, I always will typically do something close to the 5% range. The seller gave me $3,000. I doubled it. I said $6,000. It's a pretty small property, so $1,000 a unit a year. And then you always have to have a management fee plugged in of roughly 5% to make sure I'm underwriting this appropriately. Even if you're going to manage it yourself, you want to budget at least 5% for management. I'm also saying my inflation is going to be up at least 2.5%. I mean, it looks like America's much more north than that anyways. And then the other thing you're also going to want to pay attention to on the income part here is that I have 5% for vacancy. I might want to actually get to 10% here. I might want to put 10%. And the reason why I say 10% in these places, because when you're dealing with a small multifamily property, if one unit goes vacant, it's over 10% lost. And you might not have just 1 month that you lose, right? It's very common that, when you have a small multifamily, it's not going to be vacant for 1 month. It might be 2 or 3, which drastically affects your income. So a small little multifamily, to be conservative, I'd say roughly put 10% almost every single time. Until you get to about 15, maybe 20 units, you can start doing 5%. But for right now, we're going to say 10%. So the one thing we're going to be looking for based on all the details that we already plugged in. So I always like to make sure my income and expenses are plugged in first. Then I can come back here. I plug in what the seller wants first. And then I go, okay, well, based on what the seller wants, how much down do I have to put? Like, how much money down do I have to put down on the property? What's my down payment have to be in order to get my debt service coverage ratio, my DSCR, which means if my debt is this per year, my debt service, I have to pay 98 grand a year. If this is my debt service, how much money do I have to put down where this number now becomes 1.3, okay? Because you have to be above 1.25 for multifamily and above 1.3 for industrial and retail, and typically above 1.5 right now for office. I'm gonna have to change this number. Let's just say we go down to 60%. Let's see what we come to. 1.14, we're still not there yet. Let's go down to 50, it's probably 55. But I'm just gonna say 1.3, there you go. So I'm gonna have to put down at least 50% at this purchase price in order to even have a positive cash flow position where a bank will give me a loan. Okay, so a bank's only gonna finance up to a roughly 900 grand. Maybe say 55%, whatever. I'm not gonna get a loan here, right? Maybe I can do 52. But the point is that my bank's only gonna finance something like maybe 930, 940 grand on this property at most based on the current income of the property.